Contracting volatility in the altcoin space bears watching, and seasonality in May. Be aware of the stock market dip. I quantify it all on today's REKTelligence report. As a friendly reminder, everything in today's show is for informational purposes only. There is no investment advice given. All right, let's get into the show. Hey everyone, welcome. I'm Dave. This is the All Markets Report, where I quantify across asset classes with an eye to the week ahead. If you're a crypto trader, you probably want to know about the signal I'm getting in selected altcoins. And in the equity space, I look at seasonality. Happy May. Let's get into it. Let's start with crypto. And perhaps you recently saw my Edge report, where I took over 50 years of 10-year Treasury note yield data and looked at a long-term volatility indicator below it, and it really highlighted that there is a potential for a major move in yields sometime in the next several weeks to several months. It's a very long-term indicator if you watched that report last Thursday. All right, so here we are with a totally different chart and a more typical volatility set of settings, which I'll go through in a minute. So the chart here is a daily chart of the crypto total market cap, excluding Bitcoin, excluding Ether, and excluding all stable coins. So it's really a great altcoin index, what we're looking at here. And if you look at the bottom panel, you'll see the volatility IT. This is simply comparing a 10-day and a 100-day historical volatility. When you see the spikes, and those boxes indicate that the volatility index had gone above and closed above the 5 level on those 3 times. And what that indicates is that short-term volatility at those moments was just a fraction of long-term volatility. In other words, it was very depressed, very contracted, and that often indicates a sleepy market about to wake up. So we don't have that reading now, but I'll get to the current reading in just a moment because it possibly is on its way to this level. So go back there to February of 2017, early in the month, that first white box, and you can see here that this was just preceding a huge run in 2017 that really lasted all the rest of the year. Some assets peaked in December, other assets peaked in January, depending on whether it was Bitcoin or alts and so forth. But that was really the last feverish blow off top we've seen in crypto, at least in the broader market. Huge move followed that signal. We see this second box here. This was in 2018, and it doesn't look like a big move followed here in that retracement, but that was seeing altcoin market cap get cut in half. That was a 50% cut in the altcoin market cap that we're looking at here. If you go to the last time we've seen such a reading, it's here. This is late July, very last day of July in 2021. This was after we'd seen a pullback from the early 2021 highs. It was a very sharp pullback based on mining restrictions in China, and it was just a very good catalyst for a sell-off after a big run. But this preceded, the signal preceded a very nice rebound into the high, which was in November of 2021. That put in the cycle top for that particular cycle. Now, go forward to where we are here. We have seen some readings get close to the 5 level. Here we are at 3.6 currently as I record this on Sunday. And this is something to watch, because if we get a spike above that 5 level, it will be just the 4th in recent years. And of course, very tough to see on the chart, but if we went in close, you'd see a very narrow price action here in this altcoin index. So what is the main takeaway here? It is keep an eye on volatility. I will certainly update you on this, of course, and this could be, if it gets a little bit higher, a signal that alts are about to wake up. And directionally, I'll make a better assessment at that time what to expect. Traders, crypto is not a wild, unruly market. It's an asset class with 500% more time for price discovery and opportunity. My new course, Crypto Trader's Edge, is now live through Algo Advantage, one of the top quant pods and academies out there. A full systematic framework backtesting, strategy development, validation, real edges with full code, not hype. Links in the description or head to my Substack at REKTelligence. Now back to the show. All right, I almost forgot to show you a few key altcoins, such as this daily chart of Solana. Look at the right-hand side, white box that indicates a very high participation reading right now as I record this on Sunday. And yet it's a little bit shy of the two peaks we've seen before. Absolutely monster moves. Late 2022, FTX collapse had just recently happened. Solana was deeply affected by that, as the broader market was. And more recently in 2025, we saw a monster rebound there as well. So what will we see after this? Hard to say, but Solana is coiling. And if this gets just a little bit higher, I certainly will be watching it. It could indicate a potential imminent move in this key altcoin asset. Let's look at a couple others. Chainlink here, very similar price action, highest participation reading we've ever seen in Chainlink. And lastly, Cardano or ADA, again, that coiling price action on the daily chart, right-hand side. And we don't have an extreme high reading here yet, but definitely it is a multi-month, even multi-year reading currently. If this continues to climb, it will be certainly very interesting to watch. Now, some of these key assets could potentially, if they start to move, particularly to the upside, could trigger more of this kind of pattern across the altcoin universe. All right, let's dive into the stock market. I've got a seasonality focus and a very simple query, but before I get to it, quickly, the REKTelligence score, you'll see this on a couple charts that follow. This is an objective function, which just means it's a rolled up score, which takes into account profit factor, win rate, edge quality, return efficiency, or how fast is capital turnover, and drawdown risk, puts it into 0 to 100 score. Higher is better. Here we've got a hypothetical buy May 1st and sell a month later. What is the performance of May with these conditions? This is the S&P 500, 1950 to the present, 76 instances. And you can see a very interesting equity curve, not a great one, but a very negative tendency for the month of May from the early to mid 60s all the way to the mid 80s. That then switched entirely, and we saw a very positive tendency for May overall right into the late 90s. And since then, it's been very hit or miss, kind of a trading range in terms of the equity curve, if you will, but good in recent years. Average win for May, 3%. Average loss, negative 3.39%. But the hit rate or win rate here is above 50%, so it's better than a coin flip, 56.6%. It's a very modest average return over this whole time period for May of positive 0.23%. Let's take a look at a shorter term 5-day hold, again by May 1st, sell 5 trading sessions later, and we can see essentially the same hit rate. Not a great equity curve either here, but profit factor is a little better. The last chart, 1.1, this chart, 1.259, not great. It is better with this short-term hold. And the REKTelligence score is still not great here. Wasn't great on the last chart. Here it's 36.6. I usually trade 70 or higher, so obviously this misses the mark. But it is better because it's a short-term hold, and the longer hold we just looked at is going to get penalized for drawdown. More time usually means more drawdown when you look at this much history. Let's take a look at several other holding periods. Here's Strategy Analyzer with a comparison mode where we see a 3-day hold, 5-day hold, 10-day hold, 15-day hold, and then the 21 that we just looked at. And what we see are the white boxes represent the 5 and 21 that we have already taken a look at, and those are the best. If you look at 10-day and 15-day, these have a negative total return from 1950 to the present. So that is an insight to take away from buying May 1st and holding 10 days, 15 days. Historically, that has seen a sag or a negative return for those windows on average, whereas the short-term 5-day, even 3-day, or the 21-day are actually positive, even though they're no great shakes. Let's take a look at this Strategy Analyzer equity curves overlay. This is essentially a hold times comparison. And you can see the best is 5-day, 21-day actually is just under the 5-day curve. 3-day is right up there in the mix. Those were the ones that had the positive expectation. I didn't look at every single day, but basically getting a sense of short term and then the 1 month, with again 10 and 15-day being negative returns here over time, 1950 to the present. If you're interested in checking out Strategy Analyzer, go to my site. You can see a 5-minute video with all of its features. It's a great way for TradingView users to visualize the results and use institutional graphics and analytics instead of just the strategy report inside TradingView. It's very easy to get the files over, and this will launch very soon. Crypto Trader's Edge, great for crypto traders or even those who are not yet into crypto to get a very quick jumpstart into the space. And Edge Engine is a real-time scanner out in June. Look forward to telling you more about that, all on my website, tradingfromparadise.com. Thanks for watching today's All Markets Report. There are definitely some things to start looking at in the crypto space, right? We have seen Bitcoin signal quantitatively. I talk about that in my Crypto Trader's Edge course and in a couple recent reports. We've got altcoins either waking up or looking like they may soon. And of course, in the equity space, we are in May now, and there is a positive tendency or seasonality for the month of May, but we know there is that dip 10 days, 15 days in, so keep that in mind. I will see you on Thursday when I release my Edge report, and for now, signing off from your usually in the Caribbean, currently in the States, traveling trader and analyst. Have a great week.